It is rather amazing, Gil, that Bitcoin has outperformed all these other assets, every major currency, stock index, and commodity contract in 2016. When people hold Bitcoin, do they usually hold it for the long term, or are they going in and out of it because they want to get out of a currency like the Chinese yuan and use Bitcoin as a way out of that before they move it into another hard currency?
It's both. Any type of restriction on the movement of money creates an incentive to use Bitcoin. Remember, Bitcoin is a peer-to-peer network for digital cash that is very efficient to use, can go cross-border, and it can do so with very little, with very few intermediaries. Any type of restriction, capital flows from China, the elimination of cash in India, threats on remittance between the US and Mexico, anything like that creates an incentive for people to use Bitcoin. And as the market for Bitcoin starts discounting that back, there's more and more of a sense for what the importance of Bitcoin can have in a world that has more borders, more firm borders, more conflict between countries, and more limitations on how people can move money.
And Gil, it's also seen much like gold, sort of as a haven, if you will, in times of geopolitical risk. We have a chart here of gold versus Bitcoin, and particularly since the election, we have seen people sell gold, but they haven't been selling Bitcoin. Really fascinating here. And in fact, the gold premium to Bitcoin is at a 3-year low. How much of the buying here, you say that there are various reasons, obviously, that people buy Bitcoin. What sort of, how big a factor is this desire for a haven?
Well, what I would say, it's a desire for an asset that's not correlated to other assets, with real estate and equities and sometimes even fixed income moving in unison in the economy. It's very hard to put assets in something that's not correlated and can preserve value or move in a way that's independent. Bitcoin is that. It is uncorrelated with any of those other assets. That's the advantage. That's an advantage that gold used to have, but Bitcoin is far more fluid. You can feel much closer ownership of that asset, and that's working. But calling it a safe haven is taking maybe a step a little too far, because it's a commodity. It trades like oil. Just like oil went from 150 to 30 to 100 to 40, Bitcoin has gone up to 1,100 to 200, back to 900 now. It's not a safe haven in that your principal isn't secure, but there is a huge advantage to owning an asset that's not correlated to everything else you have in the portfolio.
Well, but Gil, as you say, isn't that also a disadvantage because it can go from 150 to 30 to 150, because it is so volatile?
It trades like a commodity, and you got to remember that just like oil does that, and gold does that, and copper, it trades like that, and that's why it's not a safe investment by any stretch of the imagination, but the upside is tremendous. If Bitcoin takes off and is used for remittance and for surfing without advertising and as a bank account for emerging markets and for online shopping, it could rise in price to a multiple of where it's at today. So there's a tremendous amount of upside, but it trades like a commodity, and there's a tremendous amount of volatility that comes with that.